Well, Happy New Year. It's 2022, January 1st. And I kind of just wanted to make a video because basically we're starting out the new year. And I think some people just want to hear opinions at this point about where people are investing their money and, you know, basically to see what kind of investment opportunities are out there right now. Now, I saw this article in Barron's, and they were talking about the cheapest stocks in each sector of the S&P 500. Now, I believe, based on a lot of the things that I've read and a lot of the things that I've heard, that typically most of the big stock investors, the people with a lot of money invested in the market, and the people who've made a lot of money in the market, I believe that they mostly focus on diversifying their portfolios and buying non correlated assets, which means that one is not similar to another. So that if you buy in multiple different sectors and one of those sectors happens to be temporarily down, it in many cases won't affect another sector, or in many cases, you might actually see growth in another sector that's not tied to a different sector. Like, for example, oil and technology. There's not a huge correlation between the price of gas or the price of oil and, say, buying a computer. There's not a, it's not, it's, I mean, granted, it's all the same money coming from the same public. So there always is going to be some kind of connection. But these sectors aren't very closely connected. Sectors that are closely connected might include oil and airlines, or oil and cruise lines, because as you know, cruise lines need diesel fuel. Airlines need fuel in order to fly, intercontinentally. So therefore, when oil prices go down, chances are that signifies that something's happening within the airlines, i.e., during COVID, the airlines were grounded, travel was restricted, and therefore oil prices dropped to lows that we haven't seen in years. Unfortunately, when the economy rebooted, with travel still down, there's still about 40% of your oil not being used. However, speculation drove oil prices right back through the roof. So in some cases, there's some sectors that are correlated, there's some sectors that aren't. So anyway, S&P 500 continues to trade at the very high end of its historical valuation. Now, by the way, there's a number of reasons for that. The S&P 500 is an index. They took on Tesla into the S&P 500, and Tesla is actually a decent sized block of what the S&P 500 represents, or at least the shares that it represents in different companies. Tesla right now, I believe, is about $1,000, maybe 1,090 a share if I look, and it's been as high as 1,300. But for the most part, the S&P seems like they're taking on tech companies, and a lot of the tech companies are growing very rapidly, partially because of the coronavirus quarantines, and also partially because people have a lot of money and they like spending it on technology. So anyway, this article talks about inexpensive stocks that they put together. There's a less than 40, and this is their list. So they're showing the price of 2022 earnings. As you can see, AT&T. They've got and AT&T I like because AT&T is a dividend stock. It's also connected to 5G and whatever other internet protocols that come out. AT&T, Verizon, T-Mobile, they'll all have a piece of that because they need it for their phones. I mean, these are the largest telecommunications companies in the entire country. Lumen Technologies, Discovery, Pulte Group, Dr. Horton, Lennar or DR Horton, Lennar, Altria Group, Walgreens Boots Alliance, Molson Coors Beverage, APA Energy, Coterra Energy. Notice that there's a lot of energy here. Diamondback Energy, Lincoln National Financials, Investco, Capital One. I was telling you about Capital One back when the March 2020 collapse happened because I love Capital One. Viatris, Organon, Bristol Myers Squibb, Alaska. Now you get to the airlines. Delta Airlines, Alaska Airlines, Cummins, Mosaic, Lyondell, CF Industries, CBRE Group, Vornado Realty Trust, Simon Property Group, Western Digital, more technology, Hewlett Packard, Western Union. Western Union to me is a financial, but they're counting it as a technology because they transfer money back and forth across the world with Visa, like Visa and MasterCard, and any credit card transferring system. I was telling you a while ago about Visa and MasterCard. They pay a decent dividend, and it's a good place to put money because, for the most part, people are heavily reliant on credit cards just to survive. NRG Energy, Edison International, Sempra Energy. So, as you can see, there's a whole lot of energy companies on these pages. But this is their list of places where you can invest in. And my dividend list only lists the stocks that I personally hold. However, I'm going to be looking at each and every one of these very closely to see which are the cheapest and which ones I think have room to grow. And I might invest in some of those on their list because a lot of these I've never even heard of. But right now, my dividend list is only the companies I hold in my Charles Schwab account or my TD Ameritrade account. So they say the S&P 500 consumer discretionary sector is the priciest group in the index, going for more than 33 times expected 2022 earnings. The presidents of high multiple stocks, such as Tesla, which I just mentioned, and Amazon, is responsible for a large chunk of that. Those two make up a combined 40% of the sector's market cap and go for 121 times, 68 times 2022 forecast earnings, respectively. On the other end of the valuation spectrum are three U.S. home building stocks, Pulte Group, D.R. Horton, and Lennar. Those trade for less than 8 times 2022 expected earnings. All right. The U.S. housing market has been enjoying a pandemic boom. Prices are at or near record highs in many regions. The supply of homes for sale is tight, and home builders' profits are booming. Investors, however, don't seem to expect that to last forever, and with good reason. I'm going to provide the link to this article, and you can read the rest of this yourself. Now, for my opinion about 2022 and what I plan to do with my money. So, in the back of my mind, I've been focusing a lot on electric vehicles and semiconductors. As you know, we've had a huge supply shortage due to the fact that the semiconductor industry had taken a hiatus during COVID, which was the stupidest thing you could do. And by them not keeping up with production, what ended up happening was when COVID started, we saw record amounts of technology being purchased. So first of all, you think about computers. Everybody suddenly needed to get a computer. It turns out these microchips are in everything. Your microphone, your headphone, your video game controllers, your video game systems, your cars. Everything is basically filled with microchips now. So what ended up happening was people went on a crazy purchasing rampage, and we ended up finding out that we were short in numerous sectors, specifically automotive. Most of these cars are easy to build. The problem is, without the computer chips, they can't run. So we've ended up in a situation where semiconductors have a shortage. And because semiconductors are short, everything's short because you can't sell these things without the chips in them. So basically, I believe what's going to happen is there's going to be a lot of money put towards investment in semiconductors and microchips. But what that's ultimately going to do is it's going to create a glut of supply, and eventually there may be another bust where what happens is, we reach peak production and then buyers scale back. And if that ever happens, you'll end up with basically a boom bust cycle, but you'll be in the bust. Now, I've already invested in semiconductors. As you know, I told you to get into NVIDIA, AMD, Intel, Microsoft, basically anything related to computers. I told you that back in March 2020. Some people always ask me, well, do I think it's too late to get in? And I'd say, no, it's not too late to get in because, as you know, Demand is still extremely high, and demand is going to be high for a very long time. This is the reason why I've focused on, in my dividend portfolio, I've focused on mostly oil because I know the demand's going to be high. I focused on, and think about reasons why the demand would be high. Well, a lot of people don't want to take public transportation anymore. So what did they do? They went out and bought cars. If they went out and bought cars, then that means they need fuel. Now, for that very reason, there's a lot of people who have to travel such long distances that they've decided to get electric vehicles because electric vehicles allow them to recharge them overnight rather than them spending a fortune on fuel. So electric vehicles right now do not pay dividends because right now most electric vehicle companies are not profitable. However, companies that made automotives and all the technology behind them that have gone into making EVs were already seeing record purchases and record profit. So Ford, for example, brought back their dividend, and then you had other companies whose values went up very very well, like GM and Stellantis. And there's a lot of EV companies that are new to the market, and most of those are going to end up rising in value too, to the point where they may start paying a dividend in order to foster investment into the company. Now, if you take a look at Tesla's growth, Tesla never had to give a dividend, and Tesla's only way to get people to keep investing was to do a stock split, because at a certain point their stock was so high in value and it was only going to keep on going, that right now Tesla's stock would probably be about $2,000 to $3,000 per share, but they had to do a stock split in order to make sure that it was still affordable for regular people to buy into. So there are some companies that do the stock splits, and there are other companies that don't. Two of the companies that don't are Google and Amazon. When you have Amazon right now above 3,000, and I think Google is there too, well, it's very difficult to get new investment into those companies. Now, the only people who can invest are the people who are super rich, like multimillionaires, where they can say, yeah, well, I'll buy 10,000 shares or something like that. Those people can afford it. But those are your heavy hitters. Those are your big investors. But another major source of the investment is foreign money. Buying American bonds is a losing proposition because the yields are so low. The interest is so low. What they did instead was they decided to buy a lot of U.S. stocks. Now, most foreign companies know that America has pretty much the strongest economy on the planet and probably the most resilient. Even though China is probably number one when it comes to size, low debt load, and growth, the reality is America's debt has hindered it considerably. We're at $29 trillion worth of debt, and we'll soon be at $30 trillion, probably by next year. And if not by next year, definitely by the end of next year. We'll be at $30 trillion worth of debt. The national debt will be unserviceable. People think that the Federal Reserve is going to increase interest rates in order to stave off inflation. I honestly don't believe that can happen, and the reason why is because if they raise interest rates, the national debt will become unserviceable. I think the Federal Reserve will try to raise interest rates, and at the first sign of trouble, they're going to back off. They've done this before. When I purchased my second house in 2018, interest rates on this house, even though it was at the lowest point it could be, it was at 4.7. Soon as I bought the place and we entered COVID knocked interest rates down below 3. I ended up refinancing in order to shave time and to shave interest off of the loan, to the point where right now I'm beating the cost of inflation. One of my properties already paid off, and now I'm focusing on paying off the second. I'm also focusing on buying a third. But right now, you can't really find any decent houses. So when they're talking about home builders being skeptical about the future, well, a lot of these houses have been purchased with 30-year fixed mortgages or 40-year fixed mortgages. Short of an apocalypse happening, most of these people are not going to be selling these houses. Not to mention that most of these new purchases are made by people who are financially stable. These are not people who you have to worry about defaulting because for the most part the banks have vetted these people. These people have jobs, and chances are they're either retirees or they have jobs, and many of them are on fixed income, which means that their money is coming no matter what. So they're not worried about paying for these places. Most of these people are stable. A lot of the people who have the old properties are not stable. Those people may end up losing their properties, and a lot of those people may end up on the street, but they won't probably end up on the street. They'll probably end up having to sell and move or something. So, as far as investing in real estate right now is very difficult because it's very hard to find good properties that aren't sky high. A starter house should never be $300,000, but that's where we find ourselves. Starter houses right now cost more than $300,000. A starter house should never be more than $250,000. At that point, it's no longer a starter house. But then again, if you think about it, if you and your wife are married and you're both making a decent salary and you have a $300,000 house, that means chances are you're both only paying about $1,000 out of each one of your salaries towards the mortgage. $1,000 from you, $1,000 from her. Taxes and insurance, the mortgage, the entire mortgage plus taxes and insurance probably comes out to about $2,000 or less. Now that's as long as you didn't do anything stupid and go out and buy a house you can't afford, like $450,000, $500,000, $550,000, $600,000. Now you're probably paying about $3,500 a month. So both of you better be making close to $100,000 because otherwise you're going to have some financial problems. But as far as real estate investing, Airbnb and some of these other house renting companies that allow people to rent your house and stay there, those can be profitable. However, it's really best that if you have a mother and daughter house where you can live right next to your property or on the property so you can always maintain it while you're renting it out. That's actually a better way to do it. But some people don't want to live with their tenants, which I totally understand. So if you have a second house that was left to you by your parents and it was paid off, if you're lucky enough for it to be paid off, those are really good to keep in order to rent them out. But most people can't really say that because a lot of parents right now, they're dying and leaving behind debt. A lot of grandparents are dying and leaving behind debt. Either that or either they're leaving it on their kids or they're leaving it on the state, and the state basically comes in, forecloses, and takes everything. So my whole point with the dividend stock portfolio was to remind you that even though the banks are not paying you much interest, they're giving you less than 0.05% in most cases, but definitely lower than 1. When you factor in dividend stock per share, your dividend return beats the bank just about every time. When you take a look at like the top 10, you see 8.39% per share all the way down to maybe 3.7% per share. Banks, oil companies, energy companies in general, these are the ones paying you the decent sized dividend. Telecommunication companies are paying you a decent sized dividend. The airlines right now are paying no dividend. However, those are definitely worth investing in if you can get them at rock bottom, because in the future, most of them will probably avoid bankruptcy simply because of the government bailing them out. Other companies, but I specifically like banks and oil because I trust the banks. I trust the oil companies are going to be there indefinitely. The banks will not fail because the government will not let them fail. The oil companies, for the most part, the big ones, are doing just fine. So they're in no need of bailout. They're in no need of rescuing. The mining companies themselves are doing very good, and they are factored into the price of the larger banks, how well the smaller miners are doing for the most part. The banks and the oil companies, because if you think about it, they all get their loans from the banks. So the bank is always going to be a correlated asset if you're buying into their stock, simply because so much money revolves through the bank. I love energy. I love the idea of investing in semiconductors for 2022. And I love the idea of the tech companies. I've told you about, again, Microsoft, Logitech, AMD, NVIDIA. I told you. And if you did get into them, you would definitely notice that you are way up on any of them, because I told you about AMD and Logitech back before $50. And I told you about Microsoft when it was like $100 less than it is now. And even Logitech, I've been very, very impressed with the growth that I've seen in the tech sector. Unlike COVID stocks like Zoom. There are other stocks that even though they rose, they haven't fallen. The FANG stocks, Facebook, Apple, Netflix, Amazon, Google. Netflix has been doing very well. Disney, just like I told you about Disney a long time ago, Disney's been doing very well. There are some people who let their ideology get in the way of what they're willing to invest in. There's some people who refuse to invest in Boeing because they think, oh yeah, well you let people die on a plane. There are some people who refuse to invest in Disney because they feel that China controls too much of it and China indoctrinates people through it and this, that, and that. My thing is, I don't care about the indoctrination. I don't care about your motives. I don't care about your morality. My bottom line is making money. If I could invest in a company that made electric chairs for death row and they were making me a good enough dividend, I'd be investing in them. I can give a fuck what they do. It's like companies like Lockheed Martin and military industrial complex Staples. Those are the people you might want to consider investing in. They're not going to show too much growth anytime soon because right now we're not at war. We've been at peace for a while, in fact, relative peace. We haven't had a decent wars. Now I've seen Biden is ramping up aggression with Russia and with China, but I really don't think anything's going to happen. During the Trump administration, he kept bragging about how there was peace and nobody's fighting nobody, whatever. But my thing is, you have to invest in weapon manufacturers if you want to make a slow, steady dividend. Oil companies, energy companies, weapon manufacturers, military industrial complex staples like the airlines, all of those are good. And they're all American businesses for the most part. Now, if you don't want to invest in foreign companies, that's on you. I don't mind investing in foreign companies. There are some that have been doing pretty well. There's some that you can't trust right now. China's electric vehicle companies, as long as you get them while they're low, you're good. The only one that I've lost any money on, but I'm still holding it, is Candy. And that's because after the Evergrande situation, which came out of nowhere, China's stocks in general took a tumble. So, hey, listen, it's not going to be like that forever. It's just temporary. We're still not out of COVID. Right now, a couple of the stocks that I hold that are Chinese stocks pay dividend. And I got them while they were cheap. So it's like I'm not even worried about it. Because to tell you the truth, I don't really considering holding and hodling. I don't really consider those gambling because basically you're putting a bet out on a company's future profitability. But unlike day trading, when I put my money in, I'm keeping my money there for a long time. So I'm not really worried because I know that these companies are huge markets. These companies are going to do what they do, but it's not going to be right now because right now we're still dealing with COVID. Anybody who tries to tell you that they know where the market is going is lying to you. That's the bottom line. 2 years ago, nobody would have ever guessed that America would have been quarantined under COVID. If you were to look back to December 19, what is it? If you were to look back to say December 19th, 2019, nobody could have even imagined what was going to happen. I remember in February 2020, there was no mask mandates. COVID had just gotten started. You started hearing about bodies in trucks and you started hearing about crematoriums. But until March, there was really no solid information that was reliable. Everything was like conspiracy theory. So my thing is, anybody who tells you that they see the future is lying to you. That's the bottom line. Now, I am putting money into a system and betting on future results, which that's what this market is always about. But I'd like to point back to lithium mining and the oil. I told you the oil was going to be big. I told you that if electric vehicles were going to be the future and mandated by governments, I told you that lithium mining was going to be big. Look at lithium mining now. You can go back to my old videos and look at the mining stocks that I told you about. All of these things are way up. Like even PMIF This was 50 cents 52 weeks ago, 1 year ago, almost a year ago. It's $1.30 now. See, my thing is, I was never afraid of penny stocks when it came to certain companies because the thing about it is you buy a lot of it, you just hold on to it, and you never know what's going to happen in the future. The worst that could happen is you lose $100. But the gains that I've seen were magnificent. They were absolutely magnificent. And that's just where we are. The airlines, you can't say that, the airlines are going to come back. A lot of people have bought into the airlines even with the price falls. But the problem is most people pulled out of them, especially Warren Buffett. He pulled out because he was no longer getting a dividend. He pulled out of Delta Airline because he was no longer seeing a dividend. And then he put his money in other places like Sirius XM. You know, he put his money in places where he would see a dividend on all his money. And you can't blame him for that because he did what he had to do, in order to make his investments, his investors happy. And I'm pretty sure his investors have rewarded that kind of boldness to do that. But as for the rest of us, it could be as long as 10 years before we see profitable airlines again. Nobody's traveling right now. It's 2022. Most people are not traveling. The only place they're traveling is very local. And it's like the world, most of the world is still shut down. They're still shut down over the Omicron variant. So for the most part, again, anybody who tells you that they know the future is lying to you because we could have another variant. We could have a mutation or something. Something could pop up and just start killing people off left and right. We don't know. But airlines, cruise lines, they're still down. Why? Because nobody's traveling. Nobody's traveling for the most part. But these are still decent opportunities. My thing is, unless they declare bankruptcy for the most part, I would say that most things are just going to keep churning along, and all you got to do is just hang in there. Um, I've done very, very well with oil stock, and I've done very, very well with most of my investments. Even with I bought into Berkshire Hathaway B, and they're at almost $300, $2.99 a share, but I got them when it was a lot cheaper. They've gone up. When I look back over the last year, and I look at, and see, and it's kind of bad for me to look at the last year, and the reason why is because a bulk majority of the purchases I made, like for instance, this portfolio for TD Ameritrade is the second portfolio that I did um, after, say, an economic collapse, and I did very well. I mean, I started with $5,000, and I ended up at $35,000. Then I sold off some so I could go on vacation because you got to capture those profits. You never know if shit's going to go down. And I'm going to go on Maldives business class with Emirates April 14th. Mark the date. Come hella high water, short of coronavirus killing everybody in that country, I'm going. So the bottom line is, I captured my gains, I sold off some stock, and I'm on my way out of here. I'm gonna be on that plane. I'm gonna be where is it? Where is it? The Emirates A380. Emirates A380. I'm gonna be on that plane, drinking up all their damn wine. I am gonna be drinking so much that the pilot, he's going to see a light come on that says there's something wrong in the plane. And I'm going to be drinking up all their wine. I'm going to be sitting in that business class seat drinking up all the liquor. I'm going to be bourgeoising my way all around the plane, hobnobbing with everybody. I'm going to look for the Arab sheikhs that have the white robes on, and I'm just gonna sit right next to them and hobnob with them, and they'd be like, "Oh yeah, so what are you doing?" I'd be like, "Yeah, well I own the oil field." I'd be like, "Really? Yeah, well I'm a YouTuber," and they're gonna be like, "Oh, you're a YouTuber? Wow! So no wonder you can afford to be business class with us." That's right, yes sir. I'm gonna drink all of their wine. I'm gonna be at the bar on this plane, sucking down all of the Emirates wine. I'm going to drink up all of that wine because it's all you can drink, all you can eat. I'm going to have my feet up. It's a 12.5-hour flight to Dubai, 4 hours and 30 minutes after Dubai to Maldives. But I have a 2-hour layover in Dubai. So I'm going to be in their lounge drinking up all their alcohol. You see this seat? This is the seat that you get if you say, yeah, I want to sit right next to the window. Because there's only two options in business class. You either sit next to the window or you sit next to the aisle. You don't want to sit next to the aisle because when the ladies are walking back and forth, you don't really want them right next to you. So if you sit here, you're kind of less exposed. And this is a business class seat right here. This is when I fly to Dubai, this is what I get. And if you tune in on April 14th, this is where I'm gonna be. And you see how they already got the menu right there? They got the drink menu. It's just like every other Airbus airline. If you fly business class, except this is the A380. This is the best plane that ever existed. You have your own mini bar. So they give you your own alcohol, your own water. Everything is right there for you, so you don't have to keep calling the stewardess unless you want something fresh like wine or food. It's all you can eat. You can eat anytime you feel like it. The chair folds down and everything, so you lay flat out if you want. And this was $5,000 round trip. You see that shit? $5,000 round trip. So either you want to sit right next to the window or you want to sit in the middle, because if you sit in the middle, that's okay, because if you're with your girlfriend or your wife, there's a little button right here that raises and lowers the shade. But this is how you travel. If you go into Dubai, this is how you travel. Now, if it's two of you, yeah, that's expensive, but this is how you got to do it. See, what you don't want to be is you don't want to be in economy class with the losers and the poor people who are paying $1,000 round trip. No, 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 no. I am going to have one of my wine glasses in my left hand, and I'm going to have it just spilling on the floor. And I want the people in economy to be able to see that wine glass is just spilling all over the floor. I'm going to be so bougie, it's just going to make them sick. It's going to make them absolutely sick. They're going to who the fuck is that guy up there? And why am I sandwiched next to this baby who's screaming and this old lady who smells of farts? This is how you got to do it. This right here. Look at this. Sandwiches for you. They have a walk-in, sit-down bar. I'm going to get video of all this. You can bet. I'm going to get video of all of this. Sandwiches, chips, soda, drinks, wine, everything. You got the smiling lady with this red hat on, and she is ready to service your every need. Well, not exactly every single need, but pretty much every single need that you're going to have related to air travel. This is how you got to do it. Now, I never would have been able to do this if I hadn't been an oil man. Because by being an oil man and investing so heavily into oil, while all the scared people were getting out of oil, I would have never been able to afford such fine luxury in the middle of a pandemic. I'm going to be at 30,000 feet, sucking down 1982 Cabriole, whatever they call it, wines, at 30,000 feet, while everybody else is panicking in this pandemic or at work, because I'm not going to be at work. This is a vacation. I'm going to be on vacation for spring break in the Maldives with this lady right here with the red hat servicing you all of the fruits and chips and vegetables and fruit and wine and whatnot. I'm going to be right behind the pilot, drinking him out of a plane. Drinking you'll see the wine list? There he goes. There it goes right there. There's the wine list. I'm going to drink this pilot out of a plane. By the time I'm finished drinking, the plane's going to be out of fuel. That's what I'm talking about right there. I'm going to be this guy right here, toasting with Maria Sharapova over here and talking to Kelly at the bar. This is what I'm talking about. But you never could do that if you didn't have the ability to cash out those oil stock gains. NBR, TTI, I tell you. And don't worry about my taxes. Taxes get paid February. I don't owe the government nothing. They already got the withholding. All of that shit is done. All I'm going to do is collect my tax return, and I'm going to be on my way to the air bar on the A380, and I'm going to drink that pilot. I'm going to drink so much that pilot is going to run out of reserve fuel. That's how much I'm going to drink. I'm going to drink until the lights come on in the cockpit. Look at this Arab guy taking photos right there. That guy. See, I wouldn't be letting them take those photos. See, it's okay for me to take those photos, but I wouldn't let these guys take those photos because you never know what they planted. But anyway, I don't want this seat right here. This looks like a smaller plane. This is not the 380. This might be a 777. If this is a 777, maybe you want to be over here next to the window because if you're here, the lady's walking up and down the aisle. That could get a bit annoying. So you definitely always want the window. When you're next to the window, you can't go wrong. But that's how you got to do it. That's how you got to do it. And you never, I don't know too many people who cashed out Dogecoin and they fly in Emirates. I don't know. I haven't heard too many people cash out their Shiba Inus, but I guess maybe they're just hodling until eventually they're going to have so much Shiba Inu they're going to be able to afford to buy the plane. I don't know. But look at this. Look at this. Look at this. Let me tell you something. I'm never going to ride economy ever again. Ever again. No more economy ever again. I don't give a fuck if it costs twice as much, 3 times as much, 4 times as much. I'm never, ever, ever riding economy ever again. When you're in first class, you get on first. The lady has to learn your name, so she doesn't refer to you as sir. No. She refers to you as Mr. Finkelstein or whatever your name is. She has to learn your name, and she has to wait on you the entire time. She's a personal waitress. That's what I'm talking about. This African lady right here. I can't even see this photo. It's all blurred out. I don't know. But some of these photos are a little blurry. But don't worry, I'm going to have a fresh set of photos come April 14th. I'm going to have a fresh set for my community chat. This is how you got to do it, guys. Right here. This is like Air Force One for drunks. Where you get on there and look at her. Look at her. All you do is drink the whole time. Can you imagine being on a plane for 16 hours and just drinking the whole goddamn time? By the time you get off that plane, your liver's dead. It's just dead. Look at this lady. She should have a drink. I think 2 drinks would make her look like a 10, but not right now. And oh yeah, look at this. They give you a pillow and all this stuff. Look at this. You don't get that in economy class. Man, I'd rather die than have to fly economy class. There's no point. Why live if you have to fly in economy class? They don't get to drink like this. They don't get food like this. I'd rather be dead. There's no point. You gotta fly first or business, yo. This is what I'm talking about. Look at this. So that's big. Look at this guy. Look at Win Sung Lee here. He's enjoying his flight. I don't know where he's going. I don't know why he took his watch off, put it right there. He's got an Apple Watch. You can see because Apple has that hole right there in the watch. This guy is having a great flight. He's shorter than me, so he can fold flat. I can't fold completely flat because I'm 6'6". This guy is only like 5'4". So he can enjoy it. I can't. But the thing about it is I'll be so drunk, it's not even going to matter. It's not even going to matter. But that's what I'm talking about. So that's all I really had to say. For 2022, you need to decide how you're going to invest. My recommendation, technology sector, oil, banks. That's basically it. It's a very simple strategy, but let me tell you something. It's a very simple strategy that works. And it's easy for me to talk because I got in nice and early while everything was down. While people were terrified and afraid in their house. You know what? There's an old saying. They say if there's blood in the streets, buy property. Well, I have my own saying. When coronavirus is killing everyone, buy stocks. There you go. Buy dividend-paying stocks. While coronavirus, Omicron, Delta, while that virus is burrowing its way into people's lungs and killing them, like just killing them, that's when you should be buying your stocks.